Today, we'll explore how this valuable tax benefit usually applies to individual property owners. But, what happens when a family home is owned by a company or trust? Let's find out. The Main Residence Exemption is a significant tax benefit that allows individual property owners to avoid capital gains tax when they sell their main residence. Typically, this exemption applies to properties owned by individuals, as per Section 118 to 110 of the Income Tax Assessment Act 1997. However, there are scenarios where a family home is owned by a company or trust. In such cases, the Main Residence Exemption generally does not apply. The Main Residence Exemption does not apply when the dwelling is held by a company or trust, as these entities are not considered individuals for tax purposes. Nevertheless, there are a few very limited exceptions to this rule. Let's explore them. One exception is when the property is held by a special disability trust. In such cases, there may be opportunities for the Main Residence Exemption to be applied. Another exception is when the property was owned by an individual just before their passing and is now held in a deceased estate or testamentary trust. In these specific circumstances, some special rules could potentially enable the Main Residence Exemption to apply. Lastly, the Main Residence Exemption may still apply if the occupier of the property is absolutely entitled to the property as against the trustee. To recap, the Main Residential Exemption is typically applicable to individual property owners. However, in some limited cases, properties held in a special disability trust or deceased estate can still be eligible for the exemption. Always consult a qualified tax professional for personalized advice on your specific situation. Thank you for joining us, and we hope you found this information valuable. Stay informed, stay savvy.